Good evening, everyone. Tim Davis coming back to you guys with another market update. Today is Monday, July 18th. Time is now 5:30 p.m. And I'm going to start by taking a look at the SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. And those who have been following me for a while, I've been told you over about a year ago how this was starting to deteriorate. And what this tool pretty much does is it is like a breadth indicator and shows you the breadth of the market in percentages. So it shows you the percentage of S&P 500 companies that are trading above their 200-day moving average, which is a positive for the overall health of the market. If you got the majority of S&P 500 companies trading above their 200-day moving average. If you look at a 20-year chart on this, you'll see that as we get to approach high levels, let me do this. As we start to approach high levels, we start to see some type of stall or reversal in the market, as we've seen here in the beginning, around about the middle of 2021, as we saw there, as we saw here in 2020, and a couple of big ones. Here was one back in 2011. And then here is the mother lode. We started to stall towards the top back in 2007 and started to really take a move to the downside. But all in all, folks, as I look back through history, right now, what's happening now seems to be the more extreme one that I've seen. A lot of these, we had a lot of decent bear market rallies that were very sustainable, but these bear market rallies that we've been seeing here lately have not had any good teeth to them. They've been really selling off, and this move down just continued to reinsert itself. And I'm gonna show you guys some things that I'm starting to notice within the market too, with some stocks that have been really beaten up real bad, that are trying to find a way to hold their ground. There's some stocks that really hasn't participated too much in the sell-off that's starting to, participate. That's getting ready to start to participate. So I want to highlight a couple of those that I think that are ready for a big fall, probably like some of our big heavy tech stocks, and some of the heavy tech stocks are trying to find its footing. We'll have to see how that pans out, but I'm gonna show you guys a couple that caught my eye as far as stocks that I think that some people probably look at as defensive, but I think that are about to start to experience some big time trouble, according to what the charts are showing us. But before we get to that point, again, here is the SPXA 200R. Again, we are finished today. Let me go back to a daily chart now, since you see how steep this move is. And it's like we're going to stay in this pattern for quite some time. So let me get rid of that. Let me go back to my daily chart and show you guys what unfolded today. So this yellow line is my 20-period moving average. So as you can see, we pretty much has been in a downtrend, and the 20-period moving average has been just tracking this price action. I mean, these percentage moves. We get a percentage move up, and then we'll come right back down. And this one right here was a big drop right here. So I knew that eventually market was going to want to recover some of that, which it did, but not much. Only back up to the 20-period moving average, folks. Right back up to the 20-period moving average. Then I want to point out something. Got back up to the 20-period moving average, traded sideways just a bit, and then market tried its best to retake this 20-period moving average right here. And then what happened? Look what's happening what happened today. A big red candle starts to form. So 20-period moving average was acting as an area of resistance here, where we couldn't really do too much harm. Got above it a little bit, but not much. Pulled back below it again. Got back up to the 20-period moving average. Tested it and could not break through. So if that's happening to our percentages, what do you think is going to happen to the markets? I'll tell you guys, this tool, which tracks the overall sentiment of the market, you need to really pay attention to what is tracking overall market breadth, market sentiment, which is the percentages of S&P 500 companies trading above the 200-day moving average. When this one starts to fail at a particular level, then I can almost guarantee you that our markets are about to do the same. Okay, so this one, like it wants to head back down. Where could it head back down to? Back down here. And I told you guys already, my ultimate ending, not even an end, but probably just a stalling area. I think we're going to go back down below this level right here. Go that down below that level and hit all-time lows on this particular tool and be back down towards zero somewhere. That's when we'll have almost all S&P 500 companies trading below that 200-day moving average. And I think that is coming soon. So we have to see how this pans out. But I think that's the ultimate target where we're actually heading. I think we're going to drop below this level eventually. But for right now, I think we're going to come back down and test this level. And that could be starting to unfold now. So now, with that said, still got to we still want to continue to follow this VIX. I told you to follow the VIX as well, because the VIX will also give us a heads up. Okay, so still been tracking this VIX, still been tracking the movement of this VIX, and this VIX is still hovering around these support levels. So I highlighted another support level here on the VIX, which is right back down here between that 20, what's that? In that 22 to $25 level. And look what's happening now. This is a bullish setup, folks. So they had a bullish setup in the VIX today. So now VIX could be in store finally for real be in store for its move up. Excuse me, folks. That's a bullish setup. So we have to see what the VIX does once the futures chart start trading again. That is a bullish setup. And if that bullish setup remains, then we can see the VIX first of all go back up to attempt to test that 20-per moving average again. If it breaks to that 20-per moving average, then it has some, a couple levels of resistance here, and then start to get up here to these levels. But eventually, if we get back over that 20-per moving average, I think the 20-per moving average will start to act as a level of support again for the VIX. So we have to see how that pans out. But all signs are leading to the VIX starting to rise and S&P starting to falter again, along with the rest of the market. So that's something to pay close attention to. And if you look at some of the shorter term charts, and I've been really monitoring like the 30-minute chart really here recently, just to see when we are possibly going to get a meaningful reversal, or when a meaningful reversal is about to start. And this is what I picked up in the VIX today, in this 20-per moving average. I mean, in this 30-minute chart, that we gapped down today on Friday, gapped down on Friday, deep into oversold territory. And then the VIX finally rallied today and got back above its 20-per moving average on this 30-minute chart. And look where we're resting, right above this 20-per moving average on the 30-minute chart. So this could be a level that the VIX will start to follow on the way back up. So the 20-per moving average on a 30-minute could start to turn into a level of resistance. I'm sorry, level of support, and push the VIX higher. So we're going to see how that pans out. All right, let's go back to our daily. So now let's take a look at the SPX, S&P 500. And wouldn't you know, look what's starting to unfold right now. On the daily chart of the SPXA, right back up the 20-per moving average again, and starting to stall. Look at that red candle. Went back up here and we stalled and pulled back. Went back up right here and we stalled and pulled back. Okay, and each time we pull back almost to the same level. Is the S&P in the process of another pullback and possibly want to test or even break this level, head back down to these lows? That is a huge possibility, and I think that's probably more than likely the scenario is that we will come back down to test this level here and probably break and head back down to test these levels. That's what I think we're that's starting to set up in the S&P right now. That's the S&P 500 on the daily chart. Again, folks, we're still in a bear market, so this is how these bear markets play out, and this seem like it's going to be a longer term one than anything. If we was to look at a quarterly, I'm gonna skip over a monthly chart. Look at a quarterly chart, folks. Monthly charts are already starting to be in oversold territory, but I think the quarterly charts want to start to really come in play. If we have and experience another negative quarter, which is what I think we are in store for over this next couple months, if the quarterly chart breaks below this 20 per moving average, then folks won't only be, starting to be on the fence about recession. They're going to start to agree that we're in a recession. So pay close attention to this over the next couple months. Looking for, on this quarterly chart, looking for price action to drop below this 20 per moving average and stay below it to continue this move lower. And then that's when we really start to see, some acceleration to the downside. So that's where we look. That's what the big picture looks like. Now, what about our infamous Nasdaq? So Nasdaq, same scenario, still within this downward trending channel, and right back to 20 per moving average again on this daily chart. For another, right above it just now, but we got above it here and we pulled back. Got above it here and we pulled back. So more than likely we are in store for another pullback here. And while I'm speaking of the Nasdaq, and I wanted to, I was going to share this later on, but I'm going to share it now. Apple, which is a tech darling, starting to show the floor, starting to get weak in Apple. Although it had a nice move over the last, I would say, couple weeks above its 20 per moving average. I think Apple's starting to show some weakness, folks. Apple's starting to show some weakness. If I was to draw a trend line here, this is the level that we struggled at before in the past, and it even matches up with this, with these levels over here on the left side of the screen. That matches up back to March, and we are right back at the level again now, folks. So Apple's right back at that level again now. And like I always told you guys before, we hit this level here in March, and we bounced, Apple bounced, and then up to a certain point, Apple sold off and broke below that level. So that level became, so once we broke below that level, previous support now becomes resistance. So where's Apple at now? Right back at resistance. All right. With the momentum starting to fade, with price action on the daily charts show in overbought territory now, RSI's already starting to reverse, hinge lower. That's all the signs of a making showing Apple possibly ready to head back down, folks. Not only does the technical chart show us that, but the options market, folks, there was a lot, and I mean a lot of heavy put option activity within Apple today. Prior to the day, there was a lot of call option activity. Call option activity was outweighing put option activity. Not now. Put option activity is heavily outweighing the call option activity within Apple. So you got one of the big darlings starting to show a lot of weakness. That is time to start to pay attention. Time to start to pay attention. There was a lot of put option activity. A lot was around the September contracts and August contracts, believe it or not. But there was a lot of put option activity starting to float around in Apple. And the put option activity today outweighed the call option activity, believe it or not. So that's something to be mindful of, something to pay close attention to, is that it looks like Apple it's starting to run into some resistance. And when the big boys start to run into resistance, that means the overall market, you'll probably start to see overall market start to struggle a little bit more. So now, bear cycle is still in full effect, folks. We were just experiencing some bear market rallies, and I think the bears are ready to start to sink their teeth back into this market to begin a possible another leg lower. The last leg that we had on Apple, a lower leg, this one lasted quite a bit. Oops, I mean to do that. So if we was to actually draw this one out before Apple actually broke through a level of broke out of this downward trend. So Apple was pretty stuck in this downward trending channel all the way from around April till about June, and then we came out of the downward trending channel and started to move back up. But it looks like it is going to be short-lived, folks. I think it's really going to be short-lived. Oops, didn't mean to do that. Trying to do something else here. Let's see here. Bear with me, folks. I'm just trying to correct some drawings that I just popped in here. I got more drawings popping up in here. Move that one. Okay. So if I was to extend this out to the right, you'll see how this has been an upward trending channel since Apple reversed course back in June. But I think this upward trending channel is about to be over. Very short-lived. And looks like we are possibly ready to start to trend back downward on Apple. All right, so that's something to pay close attention to. One of the big darlings is about to fool the bulls and possibly reverse in price action after a nice little sustainable reversal for about a month. But that's probably about to be over. So let's take a look at the Dow Jones. Same type of scenario. Dow Jones back up to the 20-period moving average on our daily chart. Same as we did here, same as we did here. Each one of those times we got around that same level, we reversed. So the more likely scenario is that we reverse again here. How far down, that is the question. So we have to see what the VIX shows us over the next couple of days, and what the SPXA 200R, which is the percentage of S&P 500 companies above the 200 moving average. Pay attention to that too. That's also going to show us what we can expect and how long we can expect it. All right. Last but not least, our Russell small caps. Normally they rally hard and they also fall hard. So keep that in mind, that when the small caps rally, they rally pretty hard, just like most of the other markets, and then they fall hard too. So here's where we are. Here's where we stand with the small caps Russell 2000. Again, short moves here, right back up to an area of resistance. And again, each time, pull back there, pull back there. Third time's a charm. I think third time, we're not going to just pull back and stop there. I just think we're going to continue to go down and possibly take out that low. So be prepared. I think we're going to start taking out some of these lows, folks. All right. So I think we took a look at the major things. We took a look at the all the major indices. We took a look at the VIX. Took a look at the breadth of the market by looking at the SPXA 200R. Let's just glance at crude oil for the heck of it. I'm still trying to understand and read crude oil. I think crude oil has a chance to get a sustainable bounce here. So we got to see if it finds a way to recover. And this is a daily chart on crude. Nice move up, over the past couple of days. If this finally gets a nice sustainable move higher and break above this 20 20-period moving average on this daily chart, that could be, you know, a good move for crude to start to head back up towards these highs, which also won't be good for the market. This is sustainable, you know, that start leading people to look back into the sustainable move that we are seeing in inflation. So I do think crude can get strong again and find a way to rally in a big way. So it looks like if crude could find a way to get back above, let's say 105 on WTI crude, we can really be in store for a sustainable move higher in crude and start to see inflation fears and concerns again on overall markets and start to see that pressure down on overall markets. Okay, that's that now. So that's where we are in our overall markets. That's where we are in crude. That's where we are in our overall markets. So I do think we are ready for the next leg down. Now, since I showed you guys what I was seeing in Apple. Now, there's a couple other darlings that have not spilled yet. But let me show you, first of all, a stock that like is at its lows. Look at Snap, folks. It's just been beaten up. If you look at a monthly chart of Snap, it just looks so oversold. All the way down here, almost towards the bottom. The lowest it got was 482. Do we go back to that 482 in the near term? We could possibly go back there, but with Snap being so oversold, folks, and it's coming up. Did they have earnings report recently? It has the earnings report coming up. If any bit of good news, you know, we can see a significant bounce in Snap. That's just one of the ones that I think that's at an extreme low that could find a way to make an extreme bounce. You know, it's still stuck below its 20-period moving average on a monthly. So I wouldn't, if it does get a bounce, I would not suspect to see anything extraordinary. But even looking at the weekly chart, look how oversold Snap is. Could it get even more oversold? Yes, it could. And could it also have one of these bear market rally bounces like a lot of these other stocks have been bouncing 15, 20%? It could. So that's one that I say is on the opposite end of the extreme that I'm ready to show you guys. So Snap could find a way to have a decent bounce. Now, some of the darlings that have not really participated in this, well, have participated, but not to the extent of some of these other stocks that they're getting beat up, like Snap and some of these big tech stocks. Visa, these credit card companies, folks, I think these credit card companies are about to see some pain. Many other reasons why I think they're going to see some pain. I don't think folks are, you know, really, you know, it's a lot of issues with credit card charges and people really using their credit cards like they used to. A lot of folks, I think, is really trying to avoid so much charges because inflation. They're not sure, you know, how things are going to pan out in the long run. Not only that, I'm going to show you guys from a technical standpoint. Here is the circle I got over here. That is the pandemic high on Visa. All right. Now, if I was to, let me get rid of this oval, remove, draw a line from the high over to where we are now. That takes us right back to where we are now, folks. Okay, so that is a level of resistance. Okay, we chopped through that level of resistance over the past, you know, all year. We chopped through that level of resistance. You've been chopping through it and have not really made any headway either higher or lower. So we've been chopping through this level, through this area. But here recently, you can see the 20-period movement average is starting to trend lower. See the 20-period movement average starting to trend lower? That leads me to believe that we are finally, possibly, are going to have a debacle at this level of resistance. I think this level of resistance is ready to give up the ghost. I think we're ready to head lower. And even if I was to look at a couple of the other credit card companies, such as MasterCard, you will see it doesn't look exactly like this, but you can get the point. MasterCard also at its 20-period moving average and like the 20-period moving average starting to trend lower, and we right back at that 20-period moving average, like it's ready to get rejected at the 20-period and start to head lower. And it's already below, or right at its peak of 2020. So here's a peak of 2020 on MasterCard. So the 20-period moving average is already back below that. So it looks like we are heading lower in some of these credit card companies. COF, Capital One Financial. And this one, I think, is getting ready to break a level of resistance. I mean, level support. So here's Capital One Financial, hovering just above, price action hovering just above that level of support. Again, previous resistance. Now it is support on this side, testing that support, and it has earnings coming up. So one or two things are going to happen. Either it's going to get stopped at this 20-period and reverse lower, or it's going to bounce above the 20-period and go back to all-time highs. I don't think we're going back to all-time highs any soon. So my ultimate thought process is that COF will also be stopped by its 20-period moving average. If it does bounce a little bit, that can take it up another $6-7. And then all of a sudden, I think it's going to run into that 20-period moving average and start to reverse, or we can reverse right here and just drop right below this level of support. So again, I'm looking at these credit card companies. I think they are ready to start to resume price action lower and start to head towards the COVID lows, folks. I told you guys, I think the overall market is going to be heading towards the COVID lows. I think these credit card companies are on the verge of getting there first. Well, I'll take that back because I think we had some of the tech stocks already revisited these lows. But I think these companies such as Visa, MasterCard, and COF, I think they are ready to start to join a party and start to head lower below the highs of 2020, and ready to start to test the lows of 2020. So those are just a couple. Here are two more darlings that appear to be quite defensive and tries its best to hold up in the midst of the storm, but I think it's about to have a debacle. Pepsi is one that I think is about to have a debacle. If you look up here, where price action has been trading, you almost have a triple top up here. Almost have a triple top, pretty much. Triple top, head and shoulders, whatever you want to call it. Looks like we're ready to stop at this level and start to reverse and test the COVID highs. 2020, test the level of resistance first before breaking that level of support first before breaking the level, because former resistance becomes support. So support level would be for Pepsi right around 150. So I think we're going to be heading lower in Pepsi in the near term, in the very near term. And if we was look at the RSI, look at the RSI later, the RSI is starting to curl over. Look at RSI starting to curl over. So Pepsi is one that I think is about to have a big debacle. And if you think about Pepsi, look at Coke. Same setup. Only with Coke, I think it's ready to rip and roar. So here is the highs of 2020 for Coke, right before we had that big plunge. And we are right back to that level, folks. Almost right back to that level to a T. As support, don't think we're going to hold. I think we're going to find a way to punch through this and head lower. And I also saw a lot, and I mean a lot, of unusual put option activity in Coke and Pepsi today that was starting to appear in the options market. So some folks are believing that Coke and Pepsi are ready to take a plunge. There was a big, where is it? Maybe it was on Pepsi. I saw a big bet of one particular trade on Coke or Pepsi. Here's one on Pepsi. Here it is. So Coke it was a big trade today. 20,000 contracts traded at the 47.5 strike level with the September expiration. So 20,000 contracts traded. So it could have been one big bet of someone believing that between now and September, Pepsi could be heading back towards that $47 level. I mean, Coke could be heading back towards that $47 level. And we look at Pepsi. Pepsi, the same month, same expiration. 10,000, or almost 11,000 contracts traded at the 125 strike. So there's some big bets being placed that Pepsi and Coke are about to head lower. All right, folks, that's all I have to share with you guys. Hopefully, this is some information that you guys can use. Again, pay close attention to the SPXA 200R, also the Wall Street Journal chart that charts you on the tool that shows you the new 52-week highs and new 52-week lows. Pay close attention to that, as well as the VIX. Okay, because they're going to be telltale signs as to when we will continue lower. And I think we already start to see new pressure to the downside now. Till next time on the next video, Tim Davis here signing off. Enjoy the rest of your evening, folks, and I'll catch you guys on the next video.